Ladies and gentlemen, about 77% of you think that we are in a bull market correction. Only 23% of you think we're in a bear market. Now, that's probably biased because obviously I am macro bullish. And so if I am macro bullish and constantly bullish on this YouTube channel, of course, my audience is going to lean that way. But I think in general, the broader market is leaning bullish here as well. People have an understanding at this point that we are in a macro 4-year cycle. And given that 4-year cycle, we should continue upwards here into at least Q4 this year. Now, with that said, that doesn't mean we can just say, okay, cool, awesome, let's buy everything and ignore all the charts. No, that's not what we do in TA analysis. What we do is we look at the bearish scenarios as well. We assess them, we weigh them against the bullish scenarios, and we see which one is stronger to make sure we're not making a crucial mistake. And that's what we'll be doing in this video. We'll be looking at the weekly chart RSI and the weekly chart market cipher B indicator. There's two things we need to look at using these indicators. One of them is the 62 level on the weekly chart RSI, which is the origin of weekly chart RSI price action, which will become incredibly important within the next 36 hours as Bitcoin potentially sees a weekly candle close below that level. We need to discuss the implications for that bearish weekly candle close, what it would mean for the cycle and the current macro structure. A lot of people are thinking it will be very, very negative. I'm not too convinced of that, but it's worth addressing regardless. And then secondly, we need to look into the bearish divergences that are at play here on the market cipher B and on the RSI. We'll wrap up by relating all of these things back to the current macro range on Bitcoin, looking into what needs to happen for a bull market to continue and a bear market to begin, and what the implications of these weekly charts are on both of those scenarios. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers. Right, starting out by understanding the macro range on Bitcoin, it is an absolute prerequisite before we can do any sort of analysis on any topic in regards to crypto. I strongly believe that because I believe that we should not be making macro decisions based on micro price action. And for that reason, we need to understand what the macro range is and hence understand when the next macro move will occur. And the macro range, in my view, and I'm very convinced of this view, is between these two yellow lines. Now, these two yellow lines stand backwards from 2017 and 2021 from the all-time highs on both occurrences. And by the way, those were the cyclical all-time highs, and therefore these are cyclically relevant lines. They're not just random lines drawn out of nowhere. They're actually very, very important from a 4-year cycle perspective. And what we see is that the yellow one on the bottom is offering macro support at 93,000. The yellow one on the top is offering macro resistance at 114,000. And for that reason, in order for Bitcoin to continue this bull market, we need to break the top one. And in order for Bitcoin to invalidate the bull market and go down into a bear market, we need to break the bottom one. Hence, until Bitcoin has done one of those things, nothing has really changed here, and we are just kind of ranging. Now, we'll discuss this short-term price range in tomorrow's video or the day after that. It's not really that important because, again, the macro move only occurs when the macro range breaks. So whatever is going on in the short term is kind of almost negligible, considering we're not going to be making major financial decisions based on short-term price action. At least that's not what I advocate for on this YouTube channel. And so my concern is really on the two yellow lines themselves and things that have repercussions on those two yellow lines rather than the short-term charts. For that reason, we're looking into the weekly chart today because I think these weekly charts do have massive repercussions on the short-term, on the macro yellow lines, I should say. Starting out with the one that is most pressing, which is the 62 level on the weekly chart RSI. And the reason that's most pressing is because we're going to be seeing a weekly candle close in about 36 hours. And another reason it's pressing is because in the last 2 consecutive weekly candle closes, we have actually managed to hold on to that level pretty much precisely. So it's very clear that in the last 2 weekly candle closes, the chart is being extremely reactive, pretty much exclusively to this RSI level on the weekly chart. It's done that dozens of times throughout Bitcoin's history, but it's doing it right now as we speak. And the fact that Bitcoin is currently hovering below that weekly chart RSI support zone is a little bit concerning, but it's not as concerning as some people have you believe. So let's look into what that line actually is. Well, first and foremost, before we do that, it's worth noting that the reason why this support line and resistance line here on the RSI at 62 might not look as clean as what you would expect from an analyst showing you a line is because the RSI doesn't really work the same way the price chart does. When you look at the RSI in hindsight, you're seeing the price level of the RSI it was at during the close itself, not during the week, right? We're looking at the weekly chart here, remember. So everything you're seeing is just the single moment of the close and what level the RSI was at that moment. So this support and resistance zone is actually much stronger than it appears. But with all of that said, it even appears very strong, right? Even if we're just ignoring all of that nuance, which we shouldn't be doing, right? We still have many, many precise, perfect retests of this level. And many of them just in the last year or so. I'm just circling a few right now that you can see. And you can obviously go to the chart yourself and take a look. But if we just look at the past year, let's say year and a half, and just take a few examples, just so you can get an idea of the scale of this level and what it means, you can see starting out, let's just start out, I guess, over here in 2023, what you see, we break it to the upside, we see that move before ETFs, we come down, we retest the level at the ETF decision, we support retest right here, we break it, we see a correction on Bitcoin, we reject from it, Bitcoin correction continues, we go downwards to 49,000, we break above the 62 level, that triggers the next move to the current macro range we are in. Support retest, we break it, we see a deviation below the range, and now we've gotten back above it, we're holding it for support currently, threatening to break it down. So that was kind of a quick recap of the last year and a half with this level, and you can see it has had a pretty significant implication in pretty much all of the moves we've seen. So the fact that we're threatening to close below it right now in 36 hours could seem concerning. Now, it's concerning to an extent. And by the way, in order to close below it, we need to close below something like 105,000. So if we're above 105,000 by the end of the week here, it's not the end of the world. We've actually held it, and then Bitcoin looks very good. But if we close below 105,000, we have actually broken below this 62 level. And unless it's going to be a fake out, which is quite unlikely, we probably would move downwards on Bitcoin for at least a few weeks. Now, the reason why that doesn't concern me too much is because we certainly can move downwards on Bitcoin for at least a few weeks. It's not like we're in a position in which we don't have time to do that. We still have, in my view, in the cycle's view, I should say, about 4 months left of the cycle. The cycle will be ending around the late October, somewhere around there. So we've got about 4 months left. And if Bitcoin took a few weeks here, broke down from that RSI level here, took a few weeks and went down to the bottom of the macro range before going back upwards, broke upwards in late July, we'd have about 3 months left. And that 3 months is enough to make a significant macro move to the upside and see a significant blow off top to something like 130,000, which is a conservative price target we've spoken about a few times on this channel. We can also see that Bitcoin could be resembling something like an inverted head and shoulders pattern here. And in order to complete that pattern, we'd need to go down to the bottom of the range anyway. And so this weekly chart RSI breakdown would be a prerequisite for that to occur. It would be necessary. So although this might seem like, oh, it's the end of the world, it's time for a bear market because we're breaking this level, it's not, because we still have a significant amount of breathing room between here and the bottom of the current macro range at 93,000, but also because we've broken it many times before within this bull market. In fact, we broke it 3 months ago, 4 months ago, and we didn't break the bull market. We held on to the bull market, even though we broke down from this level. So you can see corrections that don't necessarily lead to macro breakdowns while breaking this level. In fact, we saw that exact thing here in 2024. We had the macro descending channel formation. We broke this level and we still held on to that macro channel formation and we still broke up from it. So it would be a delay. It would be confirmation of the delay, but it wouldn't be necessarily existential. Now, as for the bearish divergences, because you could argue these are more existentially threatening, and you're probably right to argue that, but even in this case, and I don't want to make a big deal out of nothing, so I'm going to keep this concise. I could, scare you for 2 minutes before giving you a conclusion, but I'm just going to give you a conclusion off the rip. Bearish divergences and bullish divergences, for that matter, on the weekly chart RSI don't mean much. They just don't. And we can look at that historically. All you need to do is look at the historical data. The 1 week chart RSI is a diluted time frame to look at something like bearish divergences from, and bearish divergences inherently do not have endpoints, okay? These are not like market patterns like triangles where you can see, okay, the top line of a triangle, just hypothetically drawing it out here, and the bottom line of a triangle are compressing towards each other, and they come to a close around this date, and therefore we're going to move before that date. That's not the case with bearish divergences. Bearish divergences can exist, and they can last for months, and it can take literally up to a year or more, 2 years in some cases, on the weekly chart RSI for those bearish divergences to actually mean anything. If we look at, all we need to do, by the way, is look at 2021. 2021, we saw a massive bearish divergence. Let's get the price chart in view as well. Massive one right here between the two tops. And that bearish divergence, by the way, was taking place before that. It was taking place right here in February. It went all the way through to September. Okay, we were still seeing it in September, and we still saw our top in November, right? It didn't really have that much of an effect. It was mostly a distraction. In fact, it got to the point where it acted as a breakout line rather than a divergence, right? We saw, look at this, a breakout line forming from that, initially a bearish divergence, which led to a momentum shift to the upside. We could see something similar like that happening. In fact, I think we probably are, because if you look at the price chart right now, the RSI right now, you have some sort of triangle that seems to be forming. So maybe instead of looking at as a bearish divergence, we should be looking at as a triangle and saying, okay, we might retest the support, but we're probably going to come up and break it up like that, right? That could happen, right? So there's so many things that could occur here when it comes to weekly chart bearish divergences that I don't think it's really worth taking too seriously. This bearish divergence is valid because we've got, again, a bearish divergence, higher highs in the price chart, lower highs on the RSI, but that could be indicative of the breakdown that comes at the end of the year, right? Who's to say it needs to come right now? There's nothing saying it needs to come right now at all, really. We could see this bearish divergence last another 2 peaks. It could peak again over here, and we could be up at 130,000 in October by the time it happens, and then we break downwards. So, it could take a while to play out. There's no saying how long it will take to play out. What we can trust is something that actually says how long things are meant to take, which is the 4-year cycle itself. Now, on top of this, the reason why I'm even mentioning Market Cypher B is not because it tells us anything unique about the divergences, but it does tell us something unique about sell points and buy points, at least in theory. I don't really use Market Cypher B. I don't think it's that accurate, but but basically this is how it works. When a red dot is printed on Market Cypher B, specifically above these 2 red horizontal lines, that is a sell point. That's meant to say, okay, that's a top. And that has worked for the last 2 times. You can see where I'm circling the last 2 times. The sell point has come up. It has led to a top. But the success rate of these red dots leading to tops, actual confirmed tops, is heavily reliant on what has happened in between the last red dot and the current red dot. And that is basically, is the price chart in a new macro range than it was last time? And currently it is not, right? The reason why this dot worked is because it was a new range just after a major move. The dot played out, we saw the price action correct, we went into a new macro range after that point, and a new dot occurred, basically saying that new move is exhausted. There's no new move here, right? It's the same range. So any red dot that might come up, which by the way hasn't occurred yet, and by the way, we still have some breathing room to move upwards more here before that red dot would even happen in the first place. Anything that would come up wouldn't really be as strong or as valid as what we've previously seen. Regardless, I don't think we should be basing our analysis off of red dots. I know that's kind of a straw man, but it does seem a little ridiculous. The fact of the matter is, the last thing we saw is a green dot, okay? The last thing we saw was a buying signal, and that buying signal has not yet exhausted itself. We have not seen that red dot even take place yet. And if it was to take place, that would involve Bitcoin going downwards further. And at that point, a red dot would be printed into a major macro support zone, bolstered by significant macro indicators all over the place. And at that point, it's like, well, do you really want to trust this red dot over all of the indicators? Wouldn't you just rather wait for confirmation of them actually breaking before selling? Right, so it's more nuanced than just trusting random indicators like the Market Cypher B. And I'm not trying to straw man the indicator. It has been relatively useful historically. I mean, especially in the last couple of years, you can see where these dots have been printed. They've actually been quite accurate. But I think this time and this particular occasion, well, first of all, no dot has been printed yet. And second of all, if it was to be printed, it would be getting printed into a level that is important cyclically, to the point in which if it broke, it would break the entire cycle that has been going on for 12 years. So at that point, I just think you'd want to be waiting for the evidence for it to actually break first before reacting to a sell signal from the Market Cypher B. So it's a little bit of a nuanced answer to that second question about the Market Cypher B, but in terms of bearish divergences, which is partly an answer to Market Cypher as a whole, because Market Cypher does also act on divergences like the RSI. It is a momentum indicator. Divergences themselves, I don't think are pressing concerns at all in general on the weekly chart. They are more indicators that basically say, hey guys, this price action is unsustainable. But we already know that. And we know that because we are in a bull market. Of course, bull market price action is unsustainable. That's why it ends up in a bear market. It's just about when that occurs. The cycle says that's 4 months away. 4 months on a weekly chart perspective is no time. You can see that breakdown delayed by 4 months while still maintaining that bearish divergence validity very, very easily. And we've seen that historically. So I kind of rambled a little bit all over the place there at the end. Hopefully that made sense. I'm sure it did. More importantly, I hope you got something from this video. I think it's a quite important topic. A few people have talked about it and told me to mention it, specifically the bearish divergence and the market cipher B. But I'm more interested in this point at what's going to happen with this weekly candle close in relation to the 62 level on the weekly chart RSI, because that, in my view, is going to tell us a lot more about the price action within this macro range, and hence snowballing on from that, the price action that could result in a breakout of this macro range, even to the upside of a downside. So long-winded sentences have filled the last half of this video. I apologize for that, but sometimes the topics are a little bit nuanced. Thank you guys for watching. Hope you enjoyed. Leave a like, comment, subscribe. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global, it's non-KYC, it's never been hacked before, it's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.